This is the Southside School of Financial Freedom Watch List and Market Report for the week ending January 22nd, 2022. Our question this week is, what were the best performing S&P 500 stocks of 2021? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average decreased minus 1.3% on Friday and was down minus 4.58% for the week. The S&P 500 decreased minus 1.89% on Friday and was down minus 5.68% for the week. The Nasdaq decreased minus 2.72% on Friday and was down minus 7.55% for the week. Looking at the week, we can see that there were no up finishes versus 12 down finishes for the major indexes. On Monday, the market was closed. On Tuesday, Wednesday, Thursday, and Friday, all the major indexes ended down. The new unemployment claims were 286,000 versus 225,000 expected. December home sales dropped 4.6%. Microsoft agreed to pay almost $69 billion for Activision Blizzard. Oil prices hit a 7-year high. The U.S. 10-year Treasury yield on Tuesday hovered around 1.87%, a 2-year high. And cryptocurrencies tumbled to close out the week. New unemployment claims, December home sales dropping, Microsoft setting a new record of $69 billion to buy a company, oil prices hitting a 7-year high, the U.S. 10-year Treasury yield increasing to a 2-year high, and cryptocurrencies tumbling are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now, we are at our question of the week. What were the best performing S&P 500 stocks of 2021? Here is a list of the top 10 best performing stocks in the S&P 500. Devon Energy, ticker symbol DVN. It is an oil and gas production company. The total return was 196.1%. Marathon Oil, ticker symbol MRO, is another oil and gas production company. The total return was 149.7%. Moderna Incorporated, ticker symbol MRNA, is a biology company. The total return was 143%. And next we have Fortinet Incorporated, ticker symbol FTNT. It is a computer communications company. The total return was 142%. Then we have Signature Bank, ticker symbol SBNY. It is a regional bank, and the total return was 141.5%. And we have Ford Motor Company, ticker symbol F. It is a motor vehicle company. The total return was 137.5%. Then we have Bath and Body Works Incorporated, ticker symbol BBWI. It is a retail company. The total return was 133.7%. And then we have Diamondback Energy, ticker symbol FANG. It is again another oil and gas production company. The total return was 127.4%. At number 9, we have Nvidia Corporation, ticker symbol NVDA. It is a semiconductor company. The total return was 125.5%. And the number 10 spot goes to Nucor Corporation, ticker symbol NUE. It is a steel company, and the total return was 118.4%. Will these stocks continue to be top performers in 2022, or will they fall by the wayside? Did you own one or more of these top performing S&P 500 stocks in 2021? If not, why not? You could have chosen any one of those companies or simply choose SPY, which is the S&P 500 ETF. When you choose SPY, you are choosing 500 of the biggest companies in America. Do you own SPY, or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? It was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a day-to-day basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list for the week ending January 22nd, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was iShares Silver Trust, ticker symbol SLV. It's in the second column. It increased 5.57% for the week, but it was down minus 1.06% on Friday. SLV is a trust fund that seeks to reflect the price of silver owned by the fund, less the fund's expenses and liabilities. The fund is not actively managed. Looking at a summary of results, you can see that SLV has increased more than 4% year to date. I did not trade SLV this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. It is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 Index ETF SPY. The Southside portfolio is down minus 23.8% versus minus 7.79% down for SPY, a difference of 16.02%. The Southside is losing to SPY by just over 16%. Primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will Bitcoin rise in 2022? Stay tuned to find out what happens to Bitcoin and subsequently what happens to the Southside portfolio, because the portfolio will remain heavily invested in Bitcoin. The portfolio is 81.15% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 18.59% of the portfolio. Cash is 0.26%. The cash flow generated for this week was 0.28% of the portfolio account value. The account value changed by minus 15.83%. Meanwhile, the S&P 500 ETF SPY changed by minus 5.75%. I sold option contracts on one position this week. They were calls that ranged from $0 to $242.04. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week, and those questions are listed in the description section. Please like, share, and subscribe.